Well, many observers say the Australian property market is overdue for a major correction, but there's no sign of it in the latest numbers. The National Australia Bank's research, however, shows there is a softening in house prices as people hold off making big investments because of concern about another global recession. Here's Philip Lasker.
According to the National Australia Bank, that massive store of Australian wealth, the family home, won't be rising in value like it used to.
People are scared. They're thinking now's not a great time to be doing anything in terms of major investments. They're sitting on their hands. They're going to cash.
They're not buying houses. So NAB's residential property index moved deeper into negative territory during the September quarter, reflecting softer house prices.
It's certainly not a housing bust, but it's basically expectations of house prices being slightly negative for the next 12 to 18 months.
But there was some consolation in the latest numbers from property research group RP Data, which showed that only 3.7% of properties in Australia were worth less than their purchase price, while over 45% had more than doubled in value.
Having more than 45% of homes worth more than double what the owners purchase them for does give you a fairly decent buffer if we see some further economic turmoil or if we see housing prices fall further.
Although the numbers do not show the amount of debt carried by their owners.
850, 860, 860, 65, 865 is a bit.
And, not surprisingly, if you look at what's happened since 2007, the proportion of houses which have fallen in value more than doubles to 7.7%.
We are probably looking at property market conditions starting to level on the back of stable interest rates and potentially some interest rate falls, which should contribute to higher levels of consumer confidence. But I think without doubt, over the next couple of months at least, we will start to see that proportion of homes in negative equity actually increase in magnitude a little bit.
Not everyone is paralysed by fear. Property group CB Richard Ellis says foreign investors are flocking to Australia's commercial property sector.
Australian yields or returns are quite high by global standards. It's interesting that they've been held that way because of the high cost of debt, which of course many people are suffering from locally. But that holds the investment yields higher, and then they're high by global comparison.
CBRE says foreign investment in the sector is at a near 20-year high, and 60% of that comes from Asia.